45. The euro down 5 at 139, and yen down 84, trading out at 79.42. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, cash S&P, we're at 1313. Talk about some price spread in action out here today. We get up to the 1327, can't handle it. You're at 1313. Now, 1313, folks, is going into a few different dates, and this is what you have. First off, we get at the highs of the April 18th level, where the April 18th level, what we had done is this. We had come down off 1339. You get to 1313 to 1294. What we did there is that you had 1 billion shares. Now, we're coming into that with 900 million. So you're still coming in with decent volume. We've come off these highs, meaning the 1356. And what I suspect you're going to have is that you're going to bounce into the 1307s wide open. That's the 30th. Well, okay, so that's on your S&P. Let's go over to the Dow Industrials for a second. We take a look at the Dow Industrials because we're going to Dow Industrials down $58. You are at 12,444 right now. What game is about 12,404 on this leg? Well, I'm going to give you a short leg and the long leg. That's the short leg. Short leg meaning a few days. The NASDAQ Composite. NASDAQ Composite, what we do is this. NASDAQ Composite comes down $20. We do 2 billion shares. The 2 billion shares is basically saying flat out, we're going against the July 1st deal, which is 1.6. That puts game at 2769, which is down about, that's about another 10 points. Now, what's going to get interesting here is this. We're going to go over to Europe, and this is why. What you had in Europe at, let's see, about 9 o'clock our time. If we take a look at the market in Italy, and the reason we're going to Italy first, okay, is that was getting crushed big time. And what you had happen in Italy is that we got to 17,409. Well, bottom line is that it rallied 1,100 points from then. And what that was about, folks, is that the European Central Bank intervened in the bond market over there. And they basically stopped buying bonds. They were buying it, supposedly the rumors by a couple banks buying it. It made a huge difference. Now check it out. So if we go over to our futures for a second, and you see how these shaked and baked. This is what you had intraday. And this is, we had come down to 1295. And on this get-go down here, I was looking about 1300. So we got to 1295. That was at 0400 this morning. We're at 1310 right now. Option expiration, what I expect you're going to see here is this. You're going to bounce into option expiration. This is about as deviant as you can get. There's no two ways about that, okay? So, short term, we're at 1310. I expect you're going to see a bounce by midday tomorrow, probably right off the bat. But by midday tomorrow, you'll see a bounce. You'll bounce into Friday, and what you'll see is that as we start going back into the 1329, you'll see the contraction go dramatically again. It's going to be interesting here because we're coming into option expiration. This little level here, when we just went from 3 days from the 1354 down to 1295, folks, is a monster move. Now, most of that move was done when the markets weren't even open. It doesn't matter, though. What matters is that it made the move. It made basically almost a 50% retracement in 3 days. So that says to me on a short-term basis, this is the cause building that we have going on in the market now for lower price. And so watch how this shakes out. First, we'll go over to the 3 Qs. What the 3 Qs did is this. Expansion of volume. We did 78 million shares going against 53. You're at 57, 52. That little baby saying, hey, man, you can go into this 56.92. That can get in there in a heartbeat. Then you'll have the bounce. And then what you have here is this looks to me like a situation where we'll definitely have come down on volume now. We'll get more than likely to the end of that 56.92 area. Then you'll see that bounce come in. It could just open lower. The S&P, the SPY, what you have with the SPY is this. What the SPY did, This one's going to be really deviant, too. See, what the SPY did is this. The SPY comes down to 208 million. That is confirming, bottom line, we had made highs out there of 170 million. That's confirmed we want to go to lower price. We're at 130, 140. This can get into 130.76. It can absolutely get in there. But then I think what you're going to see, same deal, deviance, bounces into option expiration. Then next week, you see that thing take off again, going for... So the shorter-term deal, I suspect by midday tomorrow, you're going to see a bounce going into option expiration. By Monday, we'll see how the market sets up on Thursday night, because it would be real deviant if the market could basically do a couple of days bounce and then come back down the other side, option expiration. KLAC, KLA 10 core. Now this got really interesting. What you had is that KLA 10 core had come out 10 minutes before the market closed with their numbers. The stock was trading at 41.15. Stock spikes to 42.73. Closes at 41.31. Numbers go like this. They're going to pay. They're going to increase their dividend to 35 cents a share. They second quarter bookings are down 10 to 15% over the first half. They see the fourth quarter at the upper end of their guidance. The bottom line is that if we do pull up KLA 10 core, it's not in a bad situation actually. It was already down from $51 to $37. We hit the first sign of strength on July 7th, and even though today that it couldn't move, that is a sign of strength, folks. It's pushing. You had a wide price spread, accelerated volume, and that's saying that thing wants to move. Now, check this out. We'll see, the good old SEC. We'll see what the SEC, well, we know the SEC basically can't move. But this is what we had out here today. The high volatility, of course, in the markets, right? And I want to thank one of the tigers in the den. I wasn't sure who put this up, but someone had an article in the den, and sure enough, and what it was about was that the gold market knew first that when the Fed minutes were coming out, that they were divided over further stimulus. But check this out. This is absolutely illegal, too, folks. No doubt, okay? The gold market at 13.20, at 13.10 to be exact, 13.10, so it's 10 past 1, took off big time. The gold market goes from 15.54 to 15.63. So someone knew right off the bat. We're talking about 12,000 contracts. That takes off. Acceleration goes all the way up to 15.74. So in the matter of 10 minutes, we go up $20, right? And, of course, what was that all about? What that was all about, at 2 o'clock, the Federal Reserve came out with their statement, their policy statement, and inside the policy statement, a few members noted, depending on how economic conditions evolve, the committee might have to consider doing additional stimulus. Bottom line, folks, yes, someone had the Fed minutes, they went in the gold market, and they bought. And that's let me tell you something, that is not, that's someone that's in the business, flat out. That's the bottom line. That's going to be one of the banks, so the banks are still basically gaming the system. There's no two ways about it. When we talk about banks, what you have is that you have Bank of America. That hit a low out here today. The Attorney General in New York is saying, hey, bottom line, now BAC has a deal. Well, they have a deal on the table for $8.5 billion on the mortgage fraud deal. The Attorney General from New York wants to see the deal and see what it's all about first. So it's going to get interesting because the Attorney General from New York is the only force that could actually change that deal. Just because of the way it's situated, New York being the money center. Let's go over to the bond market out here. We take a look at the bonds. High volatility in bonds out here today. We did 433,000 contracts in the bond market. That was going over the 500, 481. The high out there was the 127.01. We got to 127.15. You closed underneath it. That, folks, okay, is bottom line a failure at this point. So I expect you're going to see, that's another reason that I suspect you're going to see the bounce. The bond got over the high, had lighter volume, closed underneath it. That sets up that it wants to get down to the other side, which is the 122.05. I'm in Charlie from Massachusetts. A beautiful thing out there, Charlie, and I hope you basically cleaned up that position out here today. You got your SOXS, which is the direction, a 300% position. He called on that yesterday, and bottom line, that the baby was up $5.50 today. Now, if you want to see something too, folks, okay, if you go over to the SMHs, and when we done that, it was the SMHs versus, you know, we're looking at the SMHs because of the SOX. SMHs, you can see what happened. It goes down to 19 million. You're coming into 19 million. Bottom line, now what you'll see there, the SMHs will get a small pop. That bottom line, the SOX, because this one here, the SOX, which is was the bear position inside of that market. Our phone number is 877-927-6648. And don't forget, folks, Stephen Rhodes and myself, we did a show today at 10 o'clock in the morning. That show is on Tiger TV, live on Channel 1. So we're going to be doing that again tomorrow morning. High volume stocks out here. We had GE down 25. We had Advanced Micro down 33. Oracle was off 54. We had Texas Instruments off $1.19. Qualcomm was off $1.72. For this month here, and this month only, folks, if you buy Tiger dollars, what will end up happening, I'm doing an exclusive one-day workshop, August 8th, from 10 a.m. to 3 p.m. You can come to that workshop. It's free if you buy Tiger dollars this month. We're going to be right back.